Welcome, my dear friends. Morpheus time. Today we're gonna break the illusion that market is chaos. Today, my dear friends, we have a ton of events. Actually, I find today to be very, very exciting, just based on the fact that we have lots of macro statistics today. All right, so let's actually kind of switch. We're not. Let's move the microphone closer. There we go. We're no stranger already to the economic calendar because we've done it for the past couple of days, and I think that we all, kind of have already, been introduced, but let's just cover again when we choose a particular week. There we go. We are able to filter out certain events like medium, low impact events, or maybe something that you're not really, I don't know, interested in, maybe housing statistics, right? If in America, right, I don't know, in US, USD, there we go, you can say, yeah, I don't care about housing, market in America. You can deselect this and the macro statistics are not going to show there. So when you apply a filter, there it is. You see stuff for this week. Now, we did take advantage. We made some money, you and I. We did take advantage of the Canadian CPI. We took advantage of the Great British Pound CPI yesterday, and today, in approximately 7+ minutes, we got French flash manufacturing PMI and German 15 minutes later. All right, so I don't know. Chats are open, my dear friends. If you guys have any kind of questions, comments, or concerns, I'd love to see my regulars. I'd love to see new guys. Questions, comments, concerns about trading, about additional income, financial independence. Right now, about this topic would be great in live chats in Twitch and in YouTube. We're translating to both platforms. Well, yeah, hit that subscribe button. Tell me what you guys want to hear, discuss. Let's clarify everything that might be on your mind about this. Trading is not based on luck. It's based on being prepared, I would say. And in 6 minutes, the euro should move based on French, which is, I do believe still, maybe is the second, or maybe now it's the first actually. One of the economies in Eurozone. Germany was the first, maybe still is. We'd have to take a look at that separately. But this usually, right, statistically, this is actually a key word here, is that usually, historically, statistically speaking, it presents a impulse, a spike that is noticeable, after which there is a what? Right, there is a retracement. We don't need to know where it's going to, shoot up or down. These are events where I wouldn't do pending orders, right? Now let's cover that just a little bit. While I was waiting for this, to start, I did a little bit of a kind of sneak and peek for for next week. We're going to actually start with support and resistance levels. This is actually really cool because when there's a breakout strategy, you kind of understand that there should be at least a couple of green candles, for breaks to resistance level, kind of same thing like here, or when there's a support level that you can spot. And when there's a breakout strategy, you kind of understand that there should be at least a couple of candles that are red. But I'll show this to you, again on Monday, when I'm, I cannot live without support and resistance levels. All right, so euro dollar, real market, 1 minute candles. And yesterday, yeah, I kind of goofed up over here, but the idea is that when you open a pending trade, all right, when you open a pending trade by asset, when you see this right here, 1316, 6, the fourth digit after the decimal in euro dollar, that's the pip, right? So you just, subtract this number from like three from this number and you buy, and, I don't know, for $10. and add 3 to this number, and or I'm sorry, so add 3 and buy, subtract 3 from this number and sell. And that's usually, will open a channel, one higher, one low, like one right here, one right there, and right before the impulse, usually maybe like, if you can do it fast enough, like 7 seconds before the impulse. And what happens is, yesterday we had, let's see, we have time, or I'm going to be, yeah, we have time. All right, so if we choose GBP, all right, 1 second. The GBP, there we go. We can see that yesterday, at 9 in the morning, all right, this is still evening. There we go, and there it is, right? So yesterday at 9 in the morning, my time, GMT plus 3, GBP released the CPI, there it is. And you saw there's a spike followed by a retracement. But if here, right before the opening of this candle, I opened a channel, one here, a pending asset trade, and there was a spike, it will be into one direction or the other. We don't know that, but it activates one position, and you go into the current, you close the opposite, right? So here I would have closed the sell position, and I made money essentially yesterday on this, right? There was this, there it is, at 9:01. You see it spiked up, 60 seconds later it closed. It's just that I goofed up over here a little bit. I still ended up in the money, but, well, not really the ideal situation here. And the retracement happened. So, uh, today, though, I really wouldn't advise to do that on the PMIs because, well, we're going to notice a movement, right? We're going to look, and the candle should be bigger than the previous ones, but it's not really usually something massive. Maybe it's going to be like 15, 20 pips. So if you got a pending trade that is, if you got a pending trade that is for like, I don't know, 4 pips higher, 4 pips lower, the size of the movement might be a little bit uh, inadequate, right? Not enough. So CPI, the NFP, the certain other statistics, the macros that we're going to go through, they're usually, they might be good for pending trades. But I don't think that it's really applicable to something as, I don't want to say it's like inconsequential, as the PMIs, right? So what is a PMI? PMI is Purchasing Managers Index, right? If you go to any, to expansion of this right here on the Manila folder, you actually see right there, Purchasing Managers Index, right? So why traders care? It's a leading indicator in economic health. Business react quickly to market conditions, right? I might have mentioned this yesterday. I'll mention it again. If your factory produces refrigerators, you're not going to buy 100, million tons of steel if you're only, have orders for 50 refrigerators. All right, so businesses react to it, and purchasing managers, kind of the managers, they're the ones that, order these raw materials to produce the goods and services essentially that are required in this case. All right, 36, 35 seconds. Let's go here. Euro dollar. I got 60 seconds timer, and we do have, there it is, 29 right seconds to go. When this candle closes, there should be, let's kind of zoom in a little bit. There we go. There should be an impulse. Whether up or down, we don't know, but we do know that there should be a retracement. You already see some jerking movements because, well, I'll explain that after we take advantage of this, if there is something to take advantage of. Right, so I can't say that there, 100% will be a massive spike, but let's see, and what's going on is a little bit of, I don't know, maybe my internet is a little slow or something. Maybe reaction is, I don't know, huh. Well, usually, I would say that usually it's a little bigger kind of reaction to France PMIs, right? So it's 49 or 48, 48, so it's a little higher. So it should be, I don't know, it should be good for the euro. I don't really see a big impulse, though. Unfortunately, you know what? I'm actually gonna skip this. I don't know. We're not really seeing any kind of adequate usual response, and this is where I do always encourage not to open positions willy-nilly. So there does need to be a reason uh, why you would open, and this is not really something that is bigger than the previous candles. There wasn't really any kind of massive, but maybe we could, I don't know, take a smaller position until the end of the minute, because it does look like it's it does look like it's a positive kind of statistic. And so I guess we could open the position for till the end of the candles for a higher, just based on the statistics. It's a good number, right? 47.3. It was predicted 47.7. Came out at 47.4 for the services, but the manufacturing improved, right? So there is more ordered because there are more raw materials ordered, because maybe there's more orders placed within certain companies. So 47.7, 48.7 was a raising. They were predicting 48.9, a little improvement, came out a little bit bigger. So I don't know. So I think that we're gonna make money, but I think I goofed here as well. Because I didn't end, it didn't end on the end of the minute, but it went from a minute end. So it is going to close here in the money, so we're going to make a little bit of money. All right, now, so we're going to be waiting now for the German manufacturing PMI and service PMI. Hopefully, Germany being the #1 rated economy in Eurozone, it usually produces a little bit bigger movement than France. I'm actually hoping it's going to present a much bigger movement, because this was weird. Well, not weird. This was unusual, and this is what I always kind of say to people: do not think that you have a guarantee. CPI yesterday and the CPI the day before, Canadian, British. These are a bit more impactful. They're more weighty. News, and that's why they present, whoosh, like 30, 40, 50 pip movements. NFP, the most popular macro, which is on the first of every month, or I'm sorry, so first Friday of every month, usually, and it usually presents the biggest movement out of all of these macros. Now, once again, keyword being usually. The market can do something silly, where, just like this. I really don't understand why it wasn't really as impactful, but nevertheless, we have another one coming up in 15 minutes, right at 10:30. And while we wait, I actually need to, as I mentioned, chats are open. So we're going to wait a little bit here, but right now I'm going to take advantage of the opportunity and explain to you uh, some of the conceptualization here. All right. Understand that it's the real market is like an ocean. There are big fish, there are small fish, there are whales, and there's plankton. Right now, essentially whales, we would call these big investment banks. Right, so J.P. Morgan, right? This is like a massive investment bank. I don't know, Berkshire Hathaway, right? Mutual funds, all right? So certain big entities where they have lots and lots of money. I mean, Berkshire Hathaway, it's a company of Warren Buffett, right? One of the richest people in the world. Him and his company, Berkshire Hathaway, are worth like around 177 $1 billion. $1 billion. This is ridiculous, because the ridiculous part is that it was made, this fortune was amassed mostly, if not exclusively, in the stock market. And well, what can you expect in the stock market? In the American stock market, you're expecting around like 6 to 10% growth per year. Right, so I'm actually quite shocked when I hear certain people say that, hey, binary options 92% in like 5 seconds. I want, 30, 40, 50% per day. You're like, wow, that's a tall order, actually. actually. And during our streams and during the course building that we're doing, me and my team are doing right now, we're going to discuss actually the realistic expectations of any particular instrument, right? So you understand that, hey, at 10% per day on $1,000 balance, that's $17,500 at the end of the month. If you do 10% per day of your balance, which is ridiculously, amazing, but even 10% sometimes is a tall order. Depending on how you get your signals, you would need, right? Let's actually break this down a little bit, just to, generalize. If you're looking for 10% per day, how many positions do you need to open? 1%, which is at $10, right? You would need to get essentially like 12 winning trades in a row. If you get signal once every like 10 minutes, or like, I don't know, 4 per hour, you would need to be in front of computer for like 2-3 hours. Doesn't seem like a tall order if this is the only thing that you're doing, but if this is like a side income, then coming up with 2-3 hours of free time per day is difficult in modern days because, I don't know, you got romance, you got boy toys or girlfriends, wives, families, obligations, friends, job, so your parents, sacred spending time there. So coming up with 2-3 hours per day might be a tall order, right? And this is where people say, I can do it. You can probably force yourself to do it, maybe for a month, but it's not something that you should be pressuring yourself. And this is where unrealistic expectations come from. That push you to take chances on this instrument, which is high-risk instrument, right? Let's not, kind of dilute ourselves and take off the rose-colored glasses. This revolves around probabilities, and there is never 100% probability. There's higher probability of a success, there's lower probability of success, and this is where most people will actually think that in the trading, here, you need to overcomplicate something. So, put support, resistance, 7 indicators, look at volume charts of a different graph, and, it's not really. Majority of winning trades is not done here. Majority of your winning is done here in your money management. All right? All right, anyways, but let's come back a little bit to, the topic at hand. I want to explain why there is a herky-jerky motions right before the release. All right? There is no unlimited amount of asset that it can be purchased at any given moment, right? So there is a cap, right? There's only so many things that, the price of everything depends on supply and demand principles. And so what happens is that if there is not enough supply, because certain positions are open, right, the volume of available amount of asset to be purchased is limited. The banks, big entities, the whales, they could drop a lot of money into the market into the opposite direction to free up a bit of that volume, right? So in Forex, usually people, the experienced traders will put a stop loss on their position, right? So they set it up, and if there is a particular level that usually would trigger, right, support resistance, that would trigger a stop loss, right? So say, hey, I'm going to open for $1,000, investment into an upward movement, but I'm going to set a stop loss at like $150, right? So if it goes against you at 150, the position closes. Now, when the position closes, that amount is again available for purchase. So if the bank understands, right, or, let's say a group of banks where there's lots of money, if the banks understand that at some point this statistic should be very good, they've done their analysis, then it should go up very aggressively. They obviously want to buy as much as possible, so they might, right before the position, this release of the statistic is made available, they might dump a bunch of money into the opposite direction, right? So they can buy only, let's say, 100,000, but boop, 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 they triggered some stop losses, and now they're able to buy $200,000 worth of, whatever, just a round number. So this is something that could cause that very sharp, fast volatility right before the event. Right? So the whales, they have lots of money, and essentially what we understand is that money drives spending of money, drives the market up and down. And you might ask, like, hey, wait a second, if the whales can manipulate the market, they can't really do that because you take all of the whales in the world and you take all of the other fish and plankton in the world and you weigh one against the other. The little guys, the little fishes, we're gonna win, right? So it's not something that they can just like blatantly manipulate, but they do have a little bit more, kind of weight behind their decision because they can dump a lot of money into a particular direction very quickly. They can take it out and they can, trigger some stop losses and, essentially buy in and drive the market into a different direction where everybody's going to jump on board once the statistic is released. It's just that they're going to be looking to free up a little bit of volume to take advantage of this. All right, so 3 more minutes. I just want to take this opportunity again to, thank whoever's watching. And if you guys are interested in making money, side income, live, have financial freedom from any part of the world, you can trade from the moon as long as you have the internet. So on the beach right now, if you're looking at this, or at your home in the mountains, I'm gonna go fishing. Actually, this today after the stream, I'm packing my bags. I'm going to a different city, to a wonderful spot, to do a bit of fishing with my kids. And I'm gonna have a live studio. There's an apartment that I rented there, and I have my mobile studio being set up right now. So, anyways, the idea is that stick with me. We're going to show you a whole bunch of interesting stuff that you can utilize. Hopefully, you are one of the these people that understand that some growth takes time. This, even though it can be very quick money, it's still something that we needs to factor in the factor of time. It's not something that's done overnight, but it is something that you can do, throughout, a couple of months to actually feel something significant. All right, so there we go. Less than 2 minutes. All right, so stick with me. Ask questions, leave comments in Telegram channel. You can reach out and talk to me specifically one-on-one about your goals, about your thoughts, ideas. If you sign up through the link to Pocket Option, through the link that's provided below, you get massive benefits. I can even insure your trading. All right, we can put a little insurance policy on that, and more questions, more answers, more detailed discussions about this. We can do in Telegram channel one-on-one. All right, so Germany, the first country, the strongest economy in Eurozone. In 1 minute and 10 seconds from now, let's kind of hop over and see. There it is, 8, 7, 6, 5. All right, so we are ready. So on the next minute, there should be, let's say, bring this up to 50 again as the first step. The next step will be in martingale will be 100. But already there is a bit of anticipation, perhaps. As I mentioned, very surprised, if truth be told, about the move uh, with the French manufacturing. Actually, it would take forever, but you know what? Maybe after this, maybe we can go back into history and see what kind of move it created last month with like 5-minute candles. Even though this is usually something that plays out within 1 minute, but even on 5-minute scale, it should be noticeable that there was some sort of interest in that particular moment. All right, 15 seconds until the release. And as I mentioned, you know what? If we take a look, here it's 13, here it's 13, 17. It's like 4 pip movement. It's not really a lot. So there it is. All right. So, oh no, screwed up a little bit. All right. So let's take this. Actually, I think I'm going to take another position. There we go. At that point, and maybe even a 300. But I'll wait on this one just a bit. If it pushes further any more, yeah, I might need to open another one. There we go. I think at that point, yeah, I think I'll open another one. This one, it kind of can escalate very quickly, and I don't think that I'm going to take any more. If we're going to take a loss, it's much better to have a limited loss than this massive thing. All right, so the massive spike, that's actually what I was expecting, a little bit less than that I was expecting from the French. But look, we got, 49 was last, 49.6. Growth was expected, came out at 47.2 for services, and 48.4, 48.8, and came out at 48.8. So I don't know, based on the bigger drop in services PMI, which once again kind of this geopolitical thing, with the sanctions, with much more expensive gas going to Germany for their factories and everything, it's a little bit, concerning. But all right, we have. I don't know. Did we make a? We could have actually won two positions. I know we're going to win 300 here. And there it is. All right, close position. Yeah, well, look, 400 bucks. Winning fourth to 400, so 84 and 252. Yeah, we did take a position a little bit early with the 50 bucks. But yeah, that's exactly what it is. And notice there was a spike followed by a retracement in what? In the same minute. I'm super excited when I see these kind of things because you know what? I get to share with you real graphic, and this is something you can take a look on. Actually, any platform, right? Not just Pocket Option, but keep in mind that the graphs will vary because Pocket Option has maybe like 20 quote providers, and they all get funneled through from different parts of the world through a formula that presents our graph. Certain other platforms can have different quote providers, and they might have like 4 or 6 or something like that. So it is going to be different on a 1 minute chart. But if we take like 5 minutes or 10 minutes or 15 or an hour, the difference is going to be less. If the euro falls, it falls across all graphs, but it falls to various degrees. And this is where I don't really like when people say, hey, 2 pip difference, I would have won on Yahoo Finance, graph, but I lost on MetaTrader 4, and so it doesn't make sense to compare graphs from platforms because they have different quote providers, they have different amount of quote providers and different amount of data to process through their formula, what kind of graph you see. So it is going to fall, just like what right now we saw. We saw a drop, but here it might have been like, I don't know, let's actually take, count. So it opened, let's say approximately, right, it opened approximately 13.18 and dropped to 12.95. So like 23 pips. This big candle, it looks like a Burj Khalifa in comparison to all of the other ones. There's actually only 23 pips, which that's why I said in the beginning, this is why I wouldn't open pending trades, with something like this, because if you open a like 4 pip difference, right, the 18, this would have been like a 14. So it would have been like somewhere here, right, the 4 pip difference. And the other one here, so you would have had a massive channel like this for open and close, buy and sell positions. So when it spiked, it would have activated this. It certainly did. It closed higher than what we said, right? 13, 14 right here. There's the 4th pip. But I don't know. For me, it's too little. It's too little. If this was like, I don't know, 80 pip movement, let's assume that this was 80 pip movement. This was the opening price. 4 pip difference would have been like somewhere here and here. So the probability for you to, have this spike close above or below the pending, levels is much higher than if it was, this 23 pip movement and actually the 4 pips would have been like somewhere here. This is kind of like a bigger risk. All right, so I don't like winning by, like the skin of your teeth kind of, expression by very small margin. But this is something that uh, you could do, right? So next GBP, right? 11:30 in about in about 1 hour from now. Actually less, 55 minutes from now. Take a look at GBP. and you should be able to see a similar reaction, a spike followed by a retracement. Yeah, at this time, I'm already going to be packing my bags until, for the weekend, till, for tomorrow, Saturday, and Sunday, to do a little nature surfing, to do a little bit of rest and relaxation. It's essentially what drives me to improve my, I don't know, understanding of this craft, to improve my statistics, to improve my approach. For me personally, because I love this kind of flexibility, I can do it from any part of the world. All right, so there's still no questions, no comments at the moment. Um, my usual guys, Donald and Henry, might not be with me today. But nevertheless, I do hope that you guys will join me more and more. Leave comments, reach out one-on-one. You want to make money in, comfortable conditions. This is something that's possible. Just need to, absolutely know how to use these instruments to make sure that you don't, I don't know, overextend yourself or something. So, all right, I don't know. Let's summarize, I guess. Let's summarize. Um, Once again, with your morning cup of coffee on, I don't know, on Sunday, it is a good idea to take a look at next week, right? So actually, since we are approaching, today's Thursday, right? Tomorrow's, actually, what am I talking to you guys about? Tomorrow, it's, oh yeah, leading and lagging indicators, right? Where we have trend-based or reversals, right? So tomorrow we're talking about, because on Friday, essentially we don't really have anything. Canadian core retail sales. For America, core retail sales could push the market, to create that impulse. For Canada, which is not, but it doesn't really do it on the level of NFP and CPI. If it does, it has to be kind of a big number change, right, to be noticeable usually. I would actually expect the core retail sales from Canada to reflect the movement of like French manufacturing today and services PMIs. All right, it's not really something that whoosh like German, right? A big spike followed by a retracement. It's just something that you can catch, maybe take advantage depending on what kind of statistics are released, and if you can. For Canada, once again I would expect even a lesser movement unless there's a shocking statistic, right? So zero point 0.5 they say, whoa, it's going to be much less. 0.2 for service for retail sales, and if the actual comes out negative 0.2. Well, yeah, then yeah, there should be a spike followed by a retracement. It's a slight improvement though in retail sales versus core retail sales, and the difference is I do believe that they're excluding. Therefore, be a better gauge of spending trends, underlying trend. Oh yeah, it excludes automobile sales. All right, automobile sales account for about 20% of retail sales, but they tend to be very volatile and distort the underlying trend. The core data is therefore thought to be better gauge of spending trends. So core retail sales excludes automotive sales versus retail sales in general. All right, so the retail sales in general looks to be a little bit better, but core retail looks to be a lot, well, a lot worse, predicted to be a lot worse. So if the data is mixed, if this is negative, this is positive, once again, where do you go with that kind of statistics? So you might actually say, I'm going to wait for something a little bit different or better. So this is why tomorrow we're going to be talking about technical analysis at 1600 GMT plus 3 time, the trending versus reversal trends and like leading lagging indicators. So yeah, GPP is going to have also retail sales, but even though they are the most volatile of all currencies, I don't know, I can't really stand behind this particular event because, I don't know, historically, statistically speaking, it didn't really impress me with its movements. So that's why tomorrow we're doing this. But next week, let's take a look at next week together. So there's this to this to this. There we go. Applying settings. So let's see. 25th. Okay, let's take a look. 25th is a Sunday, right? Yeah, so 26. So 26 on Monday, there's really, I don't see anything. We're going to talk about support and resistance, as I said earlier. 27th, there's also not really, nothing really of high impact. So we're going to talk about Fibonacci, which is really cool. Also kind of technical analysis. 28th, you know what? Again, all of this for New Zealand. I'm not going to wake up this early, so there's no way in hell that I will take advantage of that. So we're going to talk about breakout strategies, which is also kind of a cool thing. We're going to talk about bounce backs on the 29th. And you know what? Yeah, this week we're all going to do just technical analysis because I don't really see anything of, massive spike importance. Now, obviously, interest rate decision or official cash rate for New Zealand. I don't know, for our audience in the Asian market, maybe this is something that you should. I mean, this is the most important actual event from the macro perspective when the government raises or lowers interest rates. So the forecast will probably be the same 3.5 or a 0.25% higher or lower. And when it actually comes out, people will react to it. But it's not a surprise. This isn't something that is done spontaneously. All of the events, as I mentioned, all of the macros for the entire month, a quarter, or weekly, monthly, quarterly statistics, employment statistics, the CPIs, the unemployment rates, and all of that is calculated together to give you that particular understanding whether the government is going to raise or lower interest rates. So if you follow macros, you should actually understand if it's higher likelihood that they're going to, raise, lower, or keep the same. Right. This is where policy statement is a key word here because it reflects a pre-prepared, right, statement with carefully chosen words. So it's released at the same time. Computers analyze this very quickly, and they look for key words. And the computers also, for the rich, they open positions for buy or sell depending on the statistics, how it's released. Rate statement, right? There we go. Monetary policy statement, rate statement. Once again, but usually a little bit later. In this case, an hour later, there's a press conference, which, the questions could be answered slightly, unprepared. If the question catches the central bank representative off guard, they could say something, that could actually create much bigger volatility than this all put together. Right, so that's why it is important. FOMC meeting minutes is going to be on Wednesday at 9 p.m. Kind of late. I'm usually already putting my my newborn to sleep and my 4-year-old to bed at this time. But FOMC, what is this? The Federal Open Market Committee. Basically, 12 members of this committee that determine whether the United States is going to be putting interest rates higher or lower. Jerome Powell is at the head of this committee, the central bank representative, the head of this committee. And so what happens though is that they're in a closed room. They have a stenographer there, the guy that types everything that's being said. The contents of this meeting is released. So if, for example, there's 12 members, what if, I don't know, 7 of them said, yeah, we should raise interest rates, and, so they do raise interest rates, but there are the other 5 that were strongly opposed to this. All right, so it is in this case kind of majority rules, but in actuality, it wasn't really a unanimous decision because certain people have very strong arguments against this. So the contents of this meeting is released. Once again, computers analyze very quickly based on keywords what kind of information was discussed. What kind, was it good? Was it bad? And this is something that's released in this case. Australian CPI. CPI is very important. Consumer Price Index. So it's but as I mentioned, just for me, it's a little bit early. But we're mentioning this for Asian, possible Asian audience. That yeah, you should. There should be, take a look at this. There could be a spike followed by a retracement. And this is something that you could take advantage of on a monthly basis. All right, GDP, which for American, not really something. There's 3 of them, and usually What kind of consensus they go? They go, yeah, so they go advanced, preliminary, and final, right? So advanced usually is the one that has the biggest impact on the market. Preliminary and final, they're usually already kind of watered down. Usually, so this is a statistic that usually is released quarterly. Just Americans are releasing it in three stages. And as I mentioned, advance is usually the most impactful, and then preliminary and final are less so noticeable. Weekly statistic here. So that's why next week you and I are going to be at the same time at 1600 GMT plus 3 time, and we're going to uh, yeah, we're going to analyze, some really important aspects of trading. Just when you wake up without any kind of news, just looking at the graph is something that's going to be already enough for you to make a decision. Okay, my dear friends, once again, thank you. Thank you so much for joining me today or for watching this video. Please leave a comment. I am very, very eager to answer any of your questions about this, how to build your financial independence. Just remember, I'm not selling a trick. I am presenting you with real understanding, with knowledge, something that you'll be able to take from many, I don't know, directions and compose your plan to, move forward. I don't need millions because millions usually take on, bigger risk. I'm okay with making, little money here and there at the end of the month. It's something that's plenty for me to live on and to continue to invest, right? To invest into other avenues, into stocks, bonds, into certain savings accounts with certain banks, into real estate. This is how we branch out. We use this instrument to grow and branch out into more traditional investing because there the risk is a little bit different. It's not much lower than it is here. That's why this is very important to understand that everybody has different goals, different risk managements, different time available to sit in front of computer. I can present you with the approach with certain indicators where you would get like 4 very good signals per hour. But maybe you don't have an hour to sit in front of computer and your goal is actually to have some sort of realistic money at the end of the month, which means we need to have a different approach. Maybe we'd need to open positions every minute, all right? And then you would have like 15, 20 minutes per day and you're done. There are different approaches that you can utilize. None of them are bad as long as they're based on logic, math, statistics, and they're, excluding the luck factor. And once again, one-on-one with me, you are able to go through with all of this and clarify this for yourselves. So, all right, my dear friends, thank you. Thank you for hanging out. Morpheus out. Have an awesome, awesome day. Tomorrow, I'm going to be from a different location or on location, how to say. And I'll talk to you guys then. Bye.